Hello guys, so select here. So today, before we start this backtest session, I want to break down. I want to break down my strategy and how I use it. So now, okay, I'll just give you an overview of how I trade. Okay, so let's get into it. So so the reason for breaking down your strategy is that when you are in the market, you're not thinking, but rather you're just executing. Okay, so now this is how I trade. Okay, so I always start, let's say for example it's weekend. On Sunday or Saturday I'll go through my weekly analysis, yeah, and check my weekly objective. Okay, like like in the coming week, where will I be trading? Okay, will I be looking for buys? Will I be looking for shorts? Yeah, so I'll go using price action. I'll check what the weekly is saying. Okay, so and then another thing that I'll check whether the week that close this current week that closed, I'll check whether we took out a previous week high or low. So if we took out, and then if we took one of it and then we have the light conferences to continue, then I'll target. If we took the previous week low, then I'll target the previous week high. So now the coming week, that would be my objective. Okay, and then after that, then I'll go to the daily. I'll mark my key resistance and support levels, or you can just call them my daily zones. I'll just draw them out, and then also I'll check during the day. For example, if it's Monday, I'll check whether we have taken out the previous day high or low, and then if we have the right conferences. So when you have the right conferences, then I'll be going. If you took out the previous day low and then we have the right conferences, now I'll be looking for buys to target the previous day high. So also I have to, even after checking this, I have also to keep in mind where my weekly my weekly objective is. Okay, so after checking out my, so now I'll check whether I'm going in the trend or against. Okay, if I'm going against the trend, I'll be very conservative. Okay, at X3 I'll break even, a secure X1, yeah, things like that. I'll be very preservative. I'll preserve my capital. Okay, and then after that, most of the time when you have a daily CRT, then we have a 4 hour CRT. It starts from the 4 hours. Okay, so if I'm looking for a counter that is countering the weekly analysis, then I'll make sure, if for example I have an EM, or an EM is a short term for entry model. If you have an entry model after the CRT have been formed, whether it's 4 hours daily, okay. If you have an EM and I'm going against, then I'll have to make sure that the 4 hour CRT objective have not been met, so that I can continue with the trade that I have located. Okay, those are the some of the things that I look for. Um, so most of the time, those are just the things. Okay, then I'll go to 4 hours, 1 hour defined. Then I'll use the the legs. Leg is a defined structure. Yeah, I just qualify it as a leg. Uh, I'll draw my volume areas that I'm interested in, and then I'll just take my trades. Okay, but some of the time I just use the fixed volume for my entries. Okay, for just my execution, my entry, like to devise where I'll take the trade from. So now I want us now to have a just a small backtest session. Okay, maybe 30 minutes or 20. Okay, I hope that was clear. But if you have question, you can just DM me, or you can look out for me anytime. So now just go to weekly. Okay, I can just go to daily, and then I'll play I'll cut my chart anywhere, just anywhere, just very random. Okay, can just cut from here. Okay, then now from there, now we will do our analysis like I have explained it to you. I'll just do the analysis. Okay, so now let's dive into it. Like I like using this reasoning. Can just change. I like using uh, this whatever. Like using them. Like them like this. Okay. Pen code. I just want it to be black and yeah, that would be nice. TP SL levels. Okay. I just make it like that, and then I just make these. I just leave it like that. Then I can just confirm. Okay, guys. Now we are here. Now, like I have told you, I'll first my analysis start at the week. Okay, at the weekly time frame. Okay. Now I'll start at the weekly, and now check what has been happening on the weekly. Okay. If you check in this case scenario, in the weekly, we have been breaking structures. Okay, we have been breaking structures. Okay, we have been breaking structures. So we have been breaking structures going down. We have been breaking structures going down. Don't know if I'm clear, but anyway, we have been breaking. So if you check, we have been breaking structures. Okay, we had this break of structure here. We had another one here. We had another one here. We had another one here. Okay, then we broke that structure. So the equal lows here, it came, took them out, rejected. Yes, we had that, and then we had that. Then we had this. So the market in weekly is going for buys. Okay, then we check here around in this supply level, and then the market is ranging. Okay, the market is ranging in the weekly. Okay, if you check now, I look for my weekly objective. For example, if you check so on my weekly analysis, I know I'm going for buys, and then you have broken this structure. Then you can check, and then you can see we had after this break of structure we have a mitigation level. Okay, I've not drawn it quite I've not drawn it to what do you call it? I've not been precise on it, but okay, let's just do it the right way. So you can just put this here. Okay, it's a key resistance level here. Then it's a mitigation level. So then if you check in weekly, so this is the level. Okay. You check in weekly, we did not after breaking this, we did not support ourselves and continue. So now on my weekly, now I can expect something like this. Okay, can expect something like that. Okay, now another thing that I've told you, I'll go to weekly and check the objective. You check here. Here we took out the weekly high. Okay, and now remember our target was the weekly the weekly low, and the objective was met. Now again we took out this previous week low. Okay, now this one. Now the objective was to take the previous week high. Okay, and now that objective was met. But you can see, according, depending on what the daily is saying, then maybe we can expect a pullback to this area. Okay, so now I'll dive in to the daily. Now you have to keep that in mind, that we did not support ourselves after breaking in the weekly time frame. So at the long run, you can expect the market to pull back to this area, probably just dip into this and then continue continue going up because the main trend, the swing trade, they are on buys. Okay, now I'll go to I'll go now to daily. Okay, I'll remove everything. Now the first thing that I look for is check what do you have a break of structure in daily? No, we just came and manipulated this area, right? We just came and manipulated this area. We didn't have a significant break of structure. So since we took out that liquidity, you can now our main objective will be to take out the this this liquidity here. And now keep in mind our weekly analysis. Our weekly analysis is in these mitigation levels. Now the next thing that I will do, now I'll go to line graph and draw my zones, my daily zones. Okay, like I told you. Okay, so let me delete that. So now keeping we have seen what's happening in daily. Now you have to keep that in mind. Now I want to draw my my daily zones. Mhm. So okay, let's use the current one. Current one we have that high. Then we have that. Okay, that's the first daily zone. Then you can check we have another one. Sorry about that. We have another one here, right? We have that high. So you can just draw it like that. And the main daily zone is sorry about that. Okay, let's just put them here. So you check very well. You have the right one is here, this high. You have that one. You have another one right there. You have that one. Okay, this resistance and the difference between this and this. You can see this a bit well defined. Then you can see how that one. So let's go to the daily candles. See how they are aligning themselves. Okay, we have that one. The difference between that and that. Okay, the difference. So we can just have this one. And we can have that one. So we can have that one. Okay, you can see the key resistance is there. Okay, let's continue. So we'll draw this until so the next one we use the okay, we have the difference between that. Okay, then we have another one. Yeah, because I like drawing them within the little chart because they are a bit clean. They are a bit clearer than that. Okay. So now this is it. Okay, now I'll go to 4 hours and check what exactly happened in 4 hours. Okay, now this is 4 hours. So 4 hours we had this. So you can see we relatively have a double break of structure. Then we had this demand here. So the break of structure it went to this demand. Now you can just put the volume. Yeah, okay, let me save this template. We can just put the volume and see where the market retraced to. So this is the volume. So the market, my target, when I get the sales, I'll be targeting this area around this daily zone here. Okay. Let me check if I've drawn it to the light accuracy. So you can just call this phase one. This one here. Then you can have this. Don't want a lot of noise in this area, so we get the break of structure. So remain with that. So then from here, I'll be targeting this one. Then the volume is around this area. So okay guys. So now this is it. So I'll check now in 4 hours area. So we are coming from the daily zone. We have broken another one. Okay. Remember now we are coming from this supply. Okay. If you check, let's see where the market pulled back to. Okay. So we came, missed this. So our target was this, but the objective was not met. But we check to daily and see what happened. So if you check, sorry about that. So if you check now this market, although it was off the volume levels, you can check in this area. You can see here we took out the previous day high. Okay. So now we will dive in there and check what exactly happened there. So a daily, when you take out the previous day high, sometimes you get a CLT candle, guys. Okay. So now after taking the previous day high, we had this, then we have these candles. So most of the time, I want you to notice something. Most of the time, market tend to pull back to the flashing zone of the 4 hours candle. Okay. Notice that, guys. Keep that in your notes. Most of the time, sometimes the market will pull back to the to the to the flashing zone of the candles in 4 hours. Okay. Although here we didn't have a good CLT candle, let's go to 1 hour and check what exactly happened. We had that CLT candle in 1 hour. So now after taking out the previous day high, I believe the previous day high was must have been, okay, let's see, let's mark it correctly. Let me use the magnet to so that I can mark it. We want to see what exactly happened here. Okay, so we took out that. So that was it. So now confluences start from M30. Okay, so now I believe this is a high, because here, what is the time? It was at 6, then 2 a.m. So this was the candle. This was the this is the same day. So we had taken it out here, had an EM which failed. You can see this EM in 30 minutes failed. Then we took it again. I believe here we took out the this was the highest point. This was there's 2 a.m. So we took out the Asian liquidity here. Okay, we can see this was 2 a.m. So we had the Asian liquidity in this area. Okay, keep that in mind. We took out the Asian liquidity. After taking out the Asian liquidity, now we had this. You can see we had this sharp turn, the change of delivery. We had this gap, and then to give a sharp turn, and then came back. You see, now here it was going for the in this area it was going for the flashing zone, the 4 hours flashing zone. Okay, so now let's continue diving to the lower time frames. So we want to see exactly what happened in that area. So what did they have? So I'm pretty sure in the 5 minutes, in this 15 minutes, you can see this fabric of structure. So now this was an EM, okay, after the previous day high was taken out. Now this is 5 minutes, okay, 5 minutes. When we took out that, we took it out at what time? This was 1, 2. So we took out at 2 a.m. 2 a.m. Then we formed this QM here. The market never pulled back to the QM, so it just moved. But you can see probably we had now after that pullback. So you can see we didn't trade the volume, but we traded this. Then but now we are more interested in this area. In this case, okay. Market came formed a this was a very big bearish candle. So this was a market structure shift. Okay. And then we had a FFG here that was untraded. So this was a good liquidation. Market came, liquidated, and then liquidated again. So now, so let's see what the volume was saying in this area. We had that, we had that. Okay. So we had that. This one failed, liquidated. So how many ticks was it? So here I could have since the this didn't hold, the volume didn't hold. You can see here after that market came and liquidated to this mini. It give another EM. It give a double entry confirmation. Now this was here the entry after we took out this, took out this. Now traded this one. So now let's see where the entry was. This is it, guys. Sorry. So you can see we came liquidated. Then actually even in 1 minute we already had a aggressive mapping. Aggressive mapping where you use a lower time frame to check for the EM. Now you can see we had an aggressive mapping, then we pulled back and then went down. But rather now we had a higher time frame EM. We break our structure here and here, then we pull back to this area. Let's see where the volume was in this area. So you can see we just traded and liquidated this guy. So we said then now we had already traded the flashing zone in 4 hours, which is this one. So actually you could have just taken the trade from this liquidation. We had a 26 stop loss. Then targeting that after now taking that entry, now you could have targeted the daily low, which is okay. Now we are in that bearish move. Okay. So what I want to do, since my target is this area and this, and now the weekly mitigation level, now I'll be looking for sales. Now I'll be using the immediate regs to take the continuation. So now I'll check what I have. We have a consolidation, a break of structure. We had this break of structure. Okay, we had this break of structure here. This one here. So we have that break structure in that area, we have that gap. Go to forward. So forward, you can see we have this gap, then this one. So now I'll go to the lower time frame and check. So now this is my immediate trade. So now I'll tend to use this and see where the volume is. Okay. Now you can see the volume here. Now when we have this kind of mini and then we have a consolidation, now the volume tends to be altered with. You can see how they are. Now this cannot help you. And there is no way we break the daily zone to target this volume. So our main target should be around this area. So now let's go back to the daily and see what exactly happened in daily. So yeah, we have that. Okay. So our objective is to take this sell from this area to this area, or probably to this area. So now I'll just go again to 5 minutes, check out what is going on in the 5 minute manipulation. So there's no leg that I can use. So now I'll have to monitor and see what exactly will happen. So now I'll play. So I'll go to forwards and check if we have traded the forwards gap. Now we are in that forwards gap. Now so if this market will come here, then I'll expect a very strong rejection, but I'll want to see a confirmation in this mitigation area here. So now I'll go to again to 15 minutes and see. I want to see the market touch this mitigation area, but most of the time gold, sometimes it just taps in the mitigation wicks, then give a small reaction, then come back and clear the guys who entered early. So I'll just replay and see. So when we touch this area now, I'll monitor. Probably this market can trail this Kazoro here. Okay, this ka Zoro, the Zoro, this resistance. This resistance, yeah, resistance here. So I'll wait and see what will happen. So now I've triggered the forward gap. 1 hour, we're still in 1 hour gap. So this this market comes here, then I'll have an aggressive entry from this gap. I'll have probably a 2 stop loss there, and then I'll target this zone here. Okay. So now, but this is not the case because this is I'm not so strongly expecting this. Okay. We'll go again in daily, see we have crossed there. So you see here we have crossed the daily candle. So now I'll have to mark this so that I don't get I don't get I don't miss it out. Okay, this one is daily low. I have to mark it. So that's low. So I want to take the trade. I believe this is the low. Yes, I believe this. I don't understand. Anyway, I want to take this trade before this happens. Now you can see we have an EM in 3 minutes and this sharp turn. So now I go to 1 minute and see. So you have this in EM here. Okay. I don't touch the daily zone, but I traded the gap. Let's see what happens. pull back to this PSA. So this trade I'm not so confident with it because we have not touched the daily zone in this area, so I can just risk half. If I'm planning to risk $50 in this now, if my risk is always $50, now I'll risk $25 because I want to see another shot here. Okay, so let's see how it goes. Okay, now it starts. See guys, that's why I'm telling you. You can expect now. You see, you can see this market. So you can see now the market reaction from the weeks. Now it has a tendency to normally sometimes it does this. Like it just mediating the weeks and then comes and clears out now to the body. Now you can see the real entry now can happen in the body. Okay. So that's how it's very conservative in it. We have touched the daily zone now. Sometimes taking trades from out of volume zones, they are so hectic. For example, you don't have the volume is here. So sometimes it's very hectic to take the trades from this kind of zone. Pretty liquidated and gave a very strong rejection in this area. So let's see if it is liquidated this low area. Now let's see something happen. So you have to keep time in mind. So you have some kind of QM here, some kind of QM. It's already tested, so let's see. So you're expecting this market to come back to the QM here. This around this area. So let's see. Small entry. So we can just have 10 pips stop loss probably. Otherwise I don't know why. Trying to move it. I don't understand what's happening, but let me move it manually. Probably something like that. Wow. Market was crazy in this area. can see we have a liquidity. So now finally it decided to come to the zero zone now again. Coming to the zero zone, it liquidated again, now created another EM, came and liquidated this guy to this gap. Now we see what the volume will say, because we were here, no, still liquidated. So now another re-entry was here. So the re-entry was for the liquidation here, or you can just target the gap, where the gap is there, and just give it a probably maybe 8 pips depending on the current market, and you can just target that. Now let's see what happens again. Now you can see we have a very obvious liquidity here. So you can see now it got broken at this level. You can see this liquidity here. Remember, I only use first bull data in this case scenario. It only works on gold on first bull. Okay. So now you can see we have cleared that liquidity here. We are tending to clear the candlestick are trading to clear the liquidity. So now you can see it's a very obvious liquidity. And remember our point of interest is this area in this. Okay. So now I'll continue. So let's see exactly what happened. You see guys, actually we had the Asian liquidity high here. So the market just liquidated the Asian liquidity in this candle. Okay, and then created another EM, then came in. So this was a nice entry in the London time, this area. So let's see how it plays out. You see now we broke this low. Now yeah, the breaking level, even level, because we broke this low. So let's see. Okay. So the volume is in this trend. The market was crazy in this one. So crazy. But you see, it tapped the volume, level again. Okay. So yeah, could have taken another entry there. The market was so crazy in this area. So we have been liquidated to the D level, but I don't like. Okay, we had a stop loss here. Uh, we had a stop loss here, 8 pips. And then we went for. So this was X3. To X3, if I'm going against the trend, then remember now I'm on the trend, so I could have secured the X1, then looked for early entry in this area after the liquidation. As this market was not supposed to do that if you have already broken the structure, unless the 15-minute candle rejected back. See, it's a very, very tough consolidation. So let's see. Let's be patient and see. But I don't like break even in my trade, especially when I'm there at the right direction. If I'm not taking counters, I don't like break evens. See, it reacted again, created another EM, gave another entry here. So that's another break even. God, it was so hectic in this area. Anyway, sometimes the market will tempt you. Yeah, it will get into your nerves. This is gold, that's how it always is. See, this was a very strong, this was a bad consolidation, but you can see the first trade was not tagged out yet. See, now that's bad because we are clearly failing to break the liquidity. We are just consolidating that area. See, now that trade failed again. So it was just a bad consolidation, but you had your X1. Yeah, very tough consolidation. Liquidated again. Let's see what happens again. Again, probably really well after that. So it was so bad, so bad. So it came and liquidated to the last of this. So let's see what will happen. Yeah, that consolidation is bad. So just wait for it to be taken out. Because there's no point of doing it. Just a fucking messy consolidation. So I'll just wait until the market has broken this consolidation because I can't continue trading this consolidation. Okay, I'll wait for it to break below. Then now you can see now consolidated, manipulated. Now let's see what we had. You see this is a consolidation, manipulation, and then it had distributed. So at what time was this? This must be news. Yes, around 4 in New York. So that must have been news. So let's see after the manipulation what happened. You see, then the rejection but not had. We'll just wait. You see, you have broken. Probably can get to this liquidation level. This one can you are not going to see one what we have. So I need to see that candle that crossed bearish. Okay, we had a bearish thing there. Let's see 15 minutes bearish. So you can see the order flow was there, the volume was there. So let's see. area. So let's see. And this was a very hectic moment. No, we did not we this was a 0.1 pip, so could have entered in this area, right? Sometimes you don't have to wait until, so you can just give it a 10 pips stop loss, then continue targeting your same objective. The objective is the same. I don't know why it's not moving. Okay, sometimes this data doesn't work, so taken out another liquidity there. The volume is there, so same thing happening. We have to reduce the volume again and trade in that graph. So okay, in this strategy, because I have a very small, with a very small stop loss, I don't like just give it a room for liquidation. I don't like, I don't know what's happening in this. Let's this. I don't like scale enough. I don't like scale enough. So when we break this now, I'll move my stop loss to this high, this high that was created here. With a 10 pip stop loss, you had achieved an almost X3. But the market is so boring and messy in this area. See, again we broke, and then now again we are consolidating. So this is not safe. See, now the B was taken out. But let's see if we had a liquidation 21 minutes. Waiting the price to develop. But this one was so hectic. But anyway, guys, feel kinda tired. Uh, we can continue some other time. Thank you for watching this. Yes, thank you.